Elections are exactly 2 weeks away, and you may have questions about how the results could impact your money and the stock market. And it could be top of mind if you're gearing up to use that money, maybe for retirement. Joining us now to break this all down for us is Derek Mazzarella, a financial advisor with Gateway Financial Partners. Derek, thank you so much for being here today.
Thank you for having me.
All right, so give us some insight here. How has the stock market historically fared during a midterm election compared to other years?
Sure. So historically, the midterm election year is the worst year of all the 3 other years in the election cycle. I'm sure a lot of your viewers are nodding their head after experiencing this year. But the good news is that typically we see a post-election bump. So November and December tend to be good months for the stock market after the midterm. And then the year following it is actually the best year of the 4 years historically in the stock market.
Okay, so people are looking at their 401k right now. What should they do?
I think the thing is not to really panic. If you're looking at your investments overall, realize that we're probably going to come out of this slump that we've had. Take advantage of this usual bump that we're going to have coming up. So just really stay invested and make sure you keep investing consistently in the market.
Does it matter if Republicans take the House or the Democrats stay in power in the House? Does that have an impact on how stocks do typically?
So overall, I think people tend to estimate the party's impact on the impact of the stock market specifically. When you look historically, whether a Democrat's been president, a Republican's been president, it's been pretty similar returns. Even if you look at Obama versus Trump, Obama averaged 16.3% per year, Trump averaged 16. So there was very little difference in that regard. So politicians tend to have a very little impact on the actual stock market.
Interesting. Good to know. Now, a lot of people don't even have money in stocks. So does this even impact them when the stock market bounces up and down?
Yeah, if you don't have money in the stock market, it's not going to have a huge impact on you. One of the things I would look at is think about, policy over politics when it comes to this. Individual, politicians aren't going to make a huge impact, but the policies they implement can. For example, one of the big things that typically happens when we change from Democrat to Republican or vice versa has typically a lot to do with taxes. So Democrats may look to raise taxes if they maintain power. One of the things they may do is raise taxes on the wealthy and also maybe look at the estate tax, because right now it has very high limits and those could be dropping in the future.
Interesting. Now, how should people invest right now, especially with this market taking such big swings all the time?
Yeah, this has been an incredibly volatile year. I mean, it's been very challenging because, stocks are down, bonds are also down. I think you want to really look at quality companies. You want to maintain your positions in the market. Try not to day trade because there is going to be a lot of volatility. So pick companies and pick funds like index funds that are broad market funds that have historically done well, because those are going to be the ones that are going to carry you through this market.
All right, great advice. Thank you so much, Derek Mazzarella, with financial advisor with Gateway Financial Partners. We appreciate it.
You're welcome.